Warning. Listening to this show may result in increased levels of inspiration, motivation, and innovation. Side effects can include the immediate urge to take massive action to build a better business and life for yourself and others. You've been warned. Welcome to Influencers Radio with your host, Jack Mize.
And welcome back to another episode of Influencers Radio. Well, COVID seems to be part of our being now, part of our world, part of our existence, and it's something that we hear about every day. And it has especially affected businesses, but just about everyone, but especially business owners, have heard of the Paycheck Protection Program, or PPP, that the government rolled out during this pandemic. But what a lot of folks have not heard of is something called ERC, or the Employee Retention Credit. And it was created to help employers experiencing economic hardship, including those with suspended operations due to government orders related to COVID-19, or that have experienced a significant decline in gross receipts. Well, my guest today is Kevin A. Marshall. He has been a practicing CPA for over 30 years and is the founder and CEO of Profitopia, a virtual CPA firm based in Tucson, Arizona, that serves clients across the country. And they specialize in specifically turning around dire financial situations with unique financing, tax mitigation, and business planning solution. Kevin was named Money Magazine's People to Watch and Hartford Business Journal's 40 Under 40. And he is here to explain exactly how the ERC government program works. Kevin, welcome to Influencers Radio.
Well, Jack, thank you. That was some introduction. I wonder who wrote that.
Well, you know what? It's something that not a lot of people can have, that type of introduction.
I always say it's tough for a CPA to be funny. So I keep making attempts. So we'll see how this goes.
Oh, well, you know, if you can pull that off, then you will be the magical CPA.
There we go. As an aside, I actually do comedy improv. So there is a little bit of a comedy streak in me. So I'm just a novice. I just started. I'm still taking classes, but I do that for enjoyment.
All right. Well, if you just started, I won't laugh.
There you go. Thank you.
Well,
it's all good.
Well, I'm glad, because I think, you know, we need some levity in this time, especially when
my goodness. Tell me about it. Yeah, you know, you're talking about COVID, and I just got over COVID. My wife and kids still have it. So, yeah, we're going to be dealing with this for a very long time.
Yeah, well, I think we're all ready to get over COVID.
Oh, God, yes.
Well, let's talk about this because, you know, the Employee Retention Credit, I don't know if it's just been neglected, it's been ignored, overlooked, but a lot of people have not heard it. So let's kick it off and let's explain what the Employee Retention Credit is, and you know, why haven't we heard about it?
So great, you know, obviously great questions. So we've been working with the Employee Retention Credit since February of 2020. And still to this day, in our experience in talking to people in the marketplace, whether they be small business owners, whether they be radio show hosts, whether they be, you know, authors of books, or, you know, people within the community, we find that 75% of people that we talk to have either not heard of it or heard of it a little bit and have not done any research on it whatsoever, or even looked into it to see if their business qualifies. So that's staggering, right? I'm a numbers guy, right? 75% don't even know about it.
That's amazing.
And so it is just, you know, you would think that by now people would have heard of it, and, you know, but here's my personal opinion on the reason why people have not heard about it. So there's multiple reasons. One being when the ERC first came out, when President Trump issued the CARES Act back in March of 2020. When this first came out, the program came out at the same time as PPP, and you mentioned PPP at the beginning. That PPP got all the publicity. Well, when that legislation was first released, the business owners had to choose between the two programs. They either had to choose PPP or ERC. They could not do both. So that's one of the reasons why ERC has kind of taken a backseat and has not received the publicity, is because 99% of business owners, myself included, and our clients, we just went with PPP. So then what I find interesting is I was talking to an associate of mine, and his opinion was that the federal, and it's purely speculation, purely opinion, that the federal government needed to prove to the American people that they were supporting small businesses, and they proved that with the PPP loan program. Clearly, I mean, yes, there's fraud. There's going to be more fraud. There's going to be more people. We've come across a couple of fraud cases ourselves as we're dealing with clients, and we've rectified it, and we've actually had to return. We've had some clients have to return funds to the SBA because of fraud. But nonetheless, PPP highly, wildly successful, right? Billions and billions of dollars given away to small businesses to help them out. So the federal government said, hey, we proved our point. We don't need to do anything with ERC. And so I went, I thought that was an interesting take on things, and I would tend to agree with that. So nonetheless, so then what is ERC, and how did it come into being, and how it is transformed over time and morphed and changed, and it may continue to change. It may come back again. Who knows? We don't have a crystal ball. So as I mentioned, so ERC first came out when Trump signed the CARES Act in March of 2020, and that's when it was enacted, and it virtually went unnoticed. Again, because of the reason I stated before, that PPP received all the publicity and all the attention. Then on December 27th of 2020, when Trump signed the second CARES Act, so that was 9 months later, that's when the things changed for ERC. So, and again, ERC stands for the Employee Retention Credit. It was meant to encourage small employers to, and we'll get to the definition of a small employer in a second. But it was the purpose was to encourage small employers to be able to retain their employees and pay their employees. But when Trump signed the second CARES Act in, like I said, December 27th of 2020. They made a change, a retroactive change to the ERC, where now small business owners, I think small business owners are defined as companies under 50 employees. Under 5. I'm a CPA. I should have my numbers straight, right? But under 5, I left off a 0. Under 500 employees could now retroactively, going back to March of 2020, get both ERC and PPP. So, oh, wow. I mean, that just changed everything. And again, going back to, that there really wasn't a lot of publicity around this, even then at that point. So it still was relatively unknown and, not utilized by a lot of small businesses. I had heard about it. I was like most, I'm an entrepreneur myself. I own several businesses besides accounting businesses, but I had heard of it and I went, whatever. And so that's kind of been the feedback and the mentality of most entrepreneurs and fellow business owners is, yeah, whatever. I just don't have time to look into it. So I found out more about it from another CPA. In February, that said, hey, you have to look into this. It's an amazing program. It's unbelievable. Nobody knows about it. It's off the charts. And so I literally spent the next 2 or 3 days reading online, watching every video I could watch, and there wasn't much. There really wasn't a lot of data, Jack. It's just like, this was still early in the infancy of the ERC program. And I went, wow. So this is some serious shit, right? I mean, isn't that from Back to the Future? I think a quote from Doc Brown from Back to the Future, right? So I was like, man, this is amazing. So I completely immersed ourselves into finding out everything we could possibly learn and find out about the ERC. And it was just amazing. And again, kind of an amazing ride, during all of that year, during all of 2020, all of 21, to be able to. So we staffed up, we hired people, we marketing people, sales people, operations, accounting people, bookkeepers, to be able to handle all the clients that we were getting, to be able to help them with the ERC.
Clearly, you've done the research on this, and it's one of the reasons I wanted to have you on here, because me, as a layman and even as a business owner, I'm still have problems getting my head around the difference. Because we have, like we said, we've all heard the PPP. They talked about it. It was all over the place. And then, so what I'm trying to really understand and get my head around is that difference. How is it different than the PPP?
Okay, let me walk you through that. You and your listeners through that. So when I'm talking to people, potential clients, or I speak around the country on this topic. I'm speaking on a webinar tomorrow. I did one last week on this topic because, again, it's still, people just don't know about it. So the best analogy is it's very similar to the PPP program, right? It's a stimulus program designed for small businesses under 500 employees, right? So very similar, but then it's obviously, different at the same time. So the differences being the PPP program was with the SBA. ERC, however, is with the IRS. So, similar, but just different, right? It's coming from a different entity. So the SBA PPP program was a forgivable loan, right? It started out as a loan that could be forgiven. ERC, technically, and even though I'm a CPA, I try not to be too much of a nerdy CPA, right, and get down into the weeds too much, but it's technically a payroll tax credit. So it's not a business tax credit, not an income tax credit, but it's technically a payroll tax credit, right? So it's not a loan, it's a tax credit. So
maybe it's a naming, a branding problem there, because I think when people think of PPP, they think, "Oh, you're giving me money," but then when you hear of a tax credit, I get a credit. People, I think it's more sexy that you're going to send me money versus a credit, right?
Yes. So it's funny that you used the word sexy. So I'm trying to. So we were meeting with one. I have to be careful. So we were because I don't know if I can divulge the name of the business. So suffice it to say, we were meeting with a company that is affiliated with one of the Shark Tank judges, right? One of the judges on Shark Tank. And we were meeting with their marketing department, and the CEO. So I'm explaining this, not only this, but other tax credits to them. There's R&D tax credits, there's WOTC tax credits, there's solar tax credits, right? But back to your point, I think people think, tax credit, maybe it's okay. I just don't know, how that works, right? And so the COO of the company turns to me. He's sitting right next to me in the conference room, and he goes, "Wow." He goes, "Tax credits are sexy." And I went, "Yes, they are." And I said, "Can I steal that?" And he granted me permission. He should have known better. He should have charged me a fee to use that. But yes, so it is. I agree with you, Jack, that it's so in this case. So again, back to the analogy of, how PPP works, because I think, 95% of small business owners know how and understand somewhat of how PPP works, right? Because they receive funds from it, but not ERC. So Yeah. So the way funds were received under PPP was the SBA wired money into your bank account, right? It was pretty straightforward, and that people understood that it was a grant, or not a grant. It was a loan that could be forgiven. The way ERC works is it's very old school, and you actually receive a check in the mail from the IRS. So it's still a refund, right? But it gets dispersed or distributed to the client, to the business owner differently. So before I forget, while we're on that topic, oh my God, what a friggin' nightmare. The IRS is backlogged, unbelievably so. Never in the history of the IRS have they ever been this backlogged. Take a guess how many tax returns they have yet to process. Just take a wild guess.
Oh, I
unprocessed tax returns.
I can't even imagine.
And we're talking just paper, because they electronic, they can process immediately. So paper filed returns, how much? Just take a wild guess, Jack.
Millions, hundreds.
Over 10 million. So this was the latest information on the IRS, because the IRS, the IRS produces information for us practitioners, and they're basically like, look, we're slammed, we're backlogged, we can't. It's just insane. The backlog at the IRS is, and so tax season is going to be an absolute nightmare, because they're going into it with this huge backlog. So anyway, so that adds to some of the, obviously the confusion or the misunderstanding or whatever, but yes. So it's free money. I mean, it's back to that. It's absolutely free. And then of course, the number one question that, clients ask us, or people, is it taxable? Well, yes, of course it's taxable. Why wouldn't it be taxable? So, hey, you want free money? You want free 30 grand or 300 grand? Well, you're going to have to pay taxes on that income. It is income to your business. So,
that's a high class problem. So
yes, I mean, right. We have one client who's got a huge tax problem, right? He's got about $2 million of income. It's like, hey, that's the best problem you could ever have, is, have that kind of a tax problem. So that would be the kind of looking at how PPP works and how the ERC works, right? And comparing the two. I think people can understand that because they generally get the gist of how it worked with PPP. The other, I would say, similarity or difference between the two programs would be PPP, honestly, was fairly straightforward. I mean, it was, hey, fill out this for smaller businesses at least, fill out this application, provide us some payroll data, give us some of your payroll tax returns, and submit that to your bank, right? It was but, and then you got to PPP2, which you needed to, show or substantiate a reduction in cash receipts and how you spent the funds. So it got a little bit more complicated, but typically most businesses between themselves or their CPA or their bookkeeper could pretty much navigate PPP on their own. I mean, obviously there was still a lot of confusion, still a lot of people. We helped a number of people with the PPP loans that needed help. But ERC, oh my God, it is so common. We'll get to that, right? The complexities. That is, I think, part of the problem too, is it's not simple. It's not straightforward. It's not easy to follow. It's very complex. And the IRS has not issued a lot of guidance on the ERC. So that helps complicate things too, is okay, so how do we interpret what Congress and the Senate, and the president passed as law. So how do we apply that, to the real world? Because the real world is much more complex, right? So, well,
I think a lot of ears perked up once you said that a check comes in the mail, because I think that's probably a big, with the name of that credit, right? But I think once you hear that, a check comes in the mail, then that changes the dynamic. And one of the things that I've heard you kind of, I don't know if you coined the phrase, you call ERC PPP on steroids. So can you go into that a bit?
Well, another difference between PPP and ERC is kind of interesting, and to address your question and answer your question would be PPP had a set designated dollar amount by Congress, right? I don't remember the dollar amount. And then they ended it. They ended it, I want to say it was mid-May of 2020. And then they said, from this point on till the end of the month, you can only get funds from CICs, from community investment corporations, so specialized banks that deal with minority businesses. And they cut off the funding. And that was it. We're out of money. We cut off the program. It's a done deal because they just ran out of their allocation. Well, ERC is not that way. There's no bucket of money. It's unlimited. So the feds are just going to print money as long as, their people submit refunds on the ERC. So that's another one reason why it's PPP on steroids is there's no, I tend to exaggerate. I was going to say there's no end date, but there's actually, Jack, 5 years to statute of limitations on the ERC. So the typical statute of limitations for filing amended payroll tax returns is 3 years, but for the ERC, they extended it to 5 years. So that's the only cap on the ERC program. There's no monetary cap. There's no, hey, once the funds run out, then, see you later. They're just going to mail checks for the next 5 years.
Well, that's what I was going to ask about that because, the PPP program, it was here, then it went away, then it's back, and, and then it's gone. So are you saying that that's how long the ERC program is going to be in effect?
No. So it's in effect for all four, and we'll get into this in a second, but more in the details. But broad overview is it's effective for wages paid to employees, right? For all 4 quarters with some exceptions, but generally speaking, all 4 quarters of 2020 and all 4 quarters of 2021. So that is the effect. It's effective for 8 quarters, right? 4 quarters of 2020 and 4 quarters of 2021. But then businesses have up to 5 years to file to get their check in the mail.
Ah.
So
even businesses that may have thought they missed the boat, they think, oh, well, it's 2022 now. I missed it. They haven't missed it.
No. Okay. They absolutely have not missed it. Nope. But so back to your, so PPP on steroids. So another reason I call it PPP on steroids is in some cases, and not all, in some cases, and this is where I think people just so we get this all the time. It's like the common reaction is in our office, and it's kind of a running joke. Like, this is too good to be true. It's like, how can there be all this free money out there that I don't even know about, right? But in some cases, ERC, the ERC refund, the ERC credit, the ERC check, in some cases, it's actually more than the PPP loan.
Wow.
So just think about that So I'll give you a client we worked with in Tucson. So, and then it all just depends. And again, it's that's the running joke in the office too, is it depends. And I don't know. It's because by now we've gotten pretty much all things figured out, but every now and then we come across the new question. It's like, so we just had and I digress. Sorry. I like to ramble and talk all over the place, but we just had a client last week. They actually shut down and they had no cash receipts. And like, okay, well, the legislation doesn't address that. Do they qualify? It's just because they have, they had a reduction in cash receipts for sure, because it went to zero. They shut down their business, but they're still paying wages. They're still paying expenses. And we said, sure, they would still qualify. So these are the types of issues that we deal with here on a regular basis that come up. And we're like, oh, I don't know. But anyway, so back to I'll give you an example of a client in Tucson. They have about 18 employees. Their PPP, they got PPP one was about $150,000, right? So hey, that helped them, right? Helped keep their doors open, helped them pay their employees. They did not qualify for PPP 2, so they only got 1. But then they qualified for ERC, and they got $250,000.
Wow.
So almost double the amount, and it was the same thing, and talking to the owner of the business. Hey, we don't know about this. We didn't hear about it. We don't know anything. And in their case, they got more than they did under PPP. So, yeah, we're talking, when they got their check and their $250,000 check in the mail, the owner took a picture and texted it to me, and it's like, oh my God, this is amazing. We love you, right? I mean, why wouldn't you? So that's I've been talking for a while, but those are some of the reasons why I feel that this is PPP on steroids. So it's, not every case does somebody receive more than PPP, but in some cases, yes.
Well, so yeah, well, that's definitely I could see why you call it on steroids. Again, it's getting sexier and sexier. Before just a credit, now it's no, I get a check, and I get a bigger check.
Right. Oh my God. Right.
Yeah. So
the only drawback is you got to pay taxes on it. Or wait because of the IRS backlog, right? So
yeah,
we actually have a program. We have a program that what we can provide a hard money loan. A hard money loan just means from anywhere, but a soft money is from a bank. Hard money would be from a private individual or a foundation or a lender. We actually have a program where clients can borrow against that check coming from the IRS and get their money get it immediately. So
while they're waiting for it.
While they're waiting, yeah.
Well, so I want to circle back around because you talked about the 2020 and the 2021.
Yeah, because I've been going in circles. So I've been going in circles. Yeah, so let's circle the wagons, right? And bring me back to play. And if you can't, I love this. I mean, I am so passionate about And what's been comical to watch too is my staff, and we have about 20 employees that are dedicated full time to just working on ERC only, and a couple of the staff know more about the ERC now than I do. So I'm no longer and that's fantastic, right? I mean, I shouldn't just have the CEO know all about this, but have the staff be that knowledgeable as well. So anyway, let's circle the wagons and I'll shut up now.
No, well, I just want to make sure that we clarify for everyone. You talk about that it applies to 2020 and 2021.
Correct.
So would that be what you would say that's how long the program is in effect? That's what I guess I'm wondering. How much longer is the program in effect for people to be able to do? So it's 2020.
As of this moment, without further legislation, it's over and done. Sayonara, right?
Right.
Except for there's a 5-year deadline. You can file for up to 5 years later.
So that would be the cutoff date to apply for it. Is that correct?
To apply, to send in your tax return, amended tax returns to apply for the refund or the check. Correct.
Okay. Is 5 years from
5 years from the due date of, and again, from the due date of the original tax return.
Okay. All right. Perfect. So you have 5 years from your 2020 tax return, and then 5 years from your 2021.
21. Okay. Yep. Correct.
So you mentioned this about the one client that got the ERC after they got their PPP. So they qualified for PPP 1, but not 2, but got the ERC. So that was going to be one of my questions is, can you get ERC even if you got PPP funds? Are there any restrictions around that or any gotchas there?
So no, well, yeah, sort of a gotcha. So, and again, I think that's where, because for 9 months, from March of 2020 to December of 2020, you had to do one or the other. You had to do ERC or PPP. So I think that's part of the confusion, is that people still, are not aware of that change in December of 2020 by then President Trump. But so now, and it was retroactive, you can get both. And so the terminology that's out there is that you cannot double dip, meaning while you can get both, you have to do an allocation of wages between the two programs, between PPP and ERC. And now that's where it starts getting complex. And you go, okay, so what needs to be done is you need to look at every payroll, every employee, and go, for this dollar of wages, or for these wages that were paid this week, should these wages go to the ERC program, or should the wages go to the PPP program? And you go, oh my God, how would I even know how to do that? So that's where the complexity comes in, is on that point.
Okay. So definitely sounds like it's good to have you and your team behind you on this, because it's definitely can get into a tangled web pretty quickly there. You had mentioned the small business for companies with under 500 employees. Is there a minimum number of employees? Can this be someone that's self-employed, or a small, a 2-person office, 5-person office?
So great question. We've, talked to people who have 1 employee, and we're like, it could be 10, 20 grand you can get even for 1 employee. We haven't even gotten to the dollar amounts yet. Besides that one illustration, so we'll get to that dollar amounts in a second. But yes, there's no minimum. So great question. However, there's very strict guidelines on owners and family members. So, and again, generally speaking, and there's clearly exceptions to this, but business owners that own more than 50% of their business, their wages would not qualify under ERC. However, of course, they qualify for PPP, and that goes back to knowing how to allocate. So basically, you've got owners' wages, right? You want to put all the owners' wages to the PPP because you can do that, and then put the other employees' wages to ERC because they qualify under that program. So that's again, but if you had a father-son, and it just keeps getting deeper and deeper into the weeds, right? But generally speaking, business owners that own more than 50% of the company would not their wages would not qualify for ERC, or their family members. And you should see the list. Oh my God, I don't know whoever created this list at the IRS. It's insane. It's like brothers, sisters, your mother-in-law, your brother-in-law. It's like your cousins. It's insane. It's beyond immediate family members. So it's pretty much business owners over 50% their wages don't qualify, or any of their family members, aunts, uncles. It's just this laundry list of every possible family member somebody could have. And I think for a good reason. I think they have the foresight to be able to say, hey, we don't want to have all these businesses out there hire all their family members and get all these credits. So I think that is logical and it makes sense.
Yeah. So it's not limited to the minimum number of employees, but obviously if you're self-employed, you're the business owner, it'd be tough to qualify.
You wouldn't, correct.
Okay.
I was going to say, let's talk about the big thing. And so the question everybody has, all right, well, this all sounds wonderful, but how do I get the money? How do I qualify, right? So we're saving the best for last, right? We're holding the carrot out there. We're going, okay, well, there's 3 different ways to, and feel free to interrupt because it gets a little, I know it in my head because we live, breathe, and sleep this stuff. But for a new person, it's kind of it's overwhelming. So the first way to qualify is if the business were subject to a full or partial government shutdown. So not CDC guidelines, not like social distancing, not face mask. It has to be like the governor, the mayor, the county. So as long as the business was subject to either a full or partial government shutdown, they qualify for ERC. And you go, oh my, that's every restaurant in America, right? Every gym in America, right? Almost every dental office. So there's certain categories of businesses that automatically qualify for this, whether they get $1,000 or $1 million or $100,000, they would immediately qualify, but they only qualify during the shutdown period. So as an example, every restaurant in the state of Arizona was subject to a shutdown, whether it was state, local, or county, for 12 months, basically from March of 2020 to March of 21. So and every state is different, right? And so we have to do all the research to find out what specific shutdown provisions was your business subject to. So again, by way of an example, every restaurant in America would qualify. It's just a matter of how long they qualify, but only during the period of shutdown. So if somebody shut down completely and didn't pay any wages, they don't get there's nothing there. There's no credit. But for restaurants that stayed open, that pivoted and changed and went to all takeout and, delivery, all their wages during that shutdown period qualify. And it's like, oh my, it's the same, right? You're going to go, oh my God, that's insane. I mean, it's like, that's billions and billions of dollars that were spent on wages for these businesses that were shut down.
That's amazing. So, well, let me ask you this, because a lot of those shutdowns, a lot of businesses, they tried to plow through. They tried to make a go of it. They tried keeping the employees, but unfortunately, the shutdowns turned out to be fatal to their businesses. Is that something? Can they go back? Can those business owners go back and perhaps recruit?
If they went out of business, of course, yeah, they could go back after the fact. Again, remember, you can file up to 5 years.
Right. As long as they continued to at some point continue paying people to try to make a go of it.
That's the key, right? Yeah. You had to have, so if you pay your people as 1099 contractors, it doesn't, it has to be, and they don't have to be U.S. based, right? Because I mean, we've had somebody working for us in Israel. They were working for us in Israel, but they're a W-2 employee. So as long as they're a W-2 employee, non-owner, non-family member, then they would qualify. So that's the first bucket. We call them. That's a very technical accounting term, by the way. Bucket, right? So the first bucket is full or partial government shutdown. Instantly qualify. We don't know how much, but we have to do the research and figure out how much did you pay for wages, how much did you pay, how much did you get from PPP, but you will get something greater than $1, right?
Got you.
So that's the first bucket. Second bucket is, and Biden, when he implemented the rescue plan in May of 20, I'm getting my years mixed up here, in May of 2020, because he felt that, or the Congress felt that new businesses were getting left out, right? Because new businesses couldn't get PPP money. So they've created a new provision of the ERC that created it's called a recovery startup business. Again, it's just the term they use, recovery startup business, and that is defined as follows. Did you start your business, or did you begin operating your business, is really what the law says. Did you begin operating your business on or after February 15th of 2020? So that's the first criteria. So you're a new business, right? You opened up, and we have several clients, right? You opened up your business during a pandemic. Woohoo! I mean, kudos to you, right? Awesome. Way to go, right? Like go swim upstream. That's fantastic. You should be rewarded for that. So new business, obviously you still have to have employees, but new business created on or after February 15th of 2020, they qualify for up to $100,000. So the max is they could get more under different provisions of the ERC, but under that provision. So, and then the other caveat, the only other qualification under the second bucket or criteria is that they need to have under $1 million in revenue. So under 500 employees, under $1 million in revenue, started your business on or after February 15th of 2020, you instantly qualify for up to $100,000. It could be, $1,000, but up to $100,000 instantly. Boom. So that's available for third quarter of 21 and fourth quarter of 21 only. So again, instantly qualify as long as you meet those three criteria. Actually, you can get up to $100,000. So same thing. Yeah. You had all these new businesses out there that were formed. They don't know about this. It's crazy.
Yeah, I think there's probably a lot of them out there that would be shocked at what's available. Now, one of the big questions that I'm sure is on everyone's mind, we know the PPP, is called a loan, but they said forgivable loan, which is always a wink, wink to me. With the credit, now that we know that you actually get a check in the mail, I think the big question is, are they going to be knocking on my door to get that back at any point in time? So is that something that a business has to pay back at any point? No.
Yeah, it's subject to audit. I mean, they could get the IRS could audit them, but again, if there are 100,000 or 10 million tax returns, they're just swamped, overwhelmed. They just authorized to hire like another 80,000 IRS people. Well, who? Sure, you can authorize that all day long, but there's not qualified people out there that could work for the IRS, quite frankly. that are qualified to do this work, that have an accounting or finance background. But I digress. That
sounds like your staff might be able to go in there and help them. So,
yeah, of course. I've thought about that. I was like, right down the road, I could approach the IRS and say, hey, we'll figure out a way to audit all these businesses. But anyways, I digress. Totally digress. So the third way, and the more complicated way to be able to qualify for ERC, is a cash receipts test. And the way that works is that if you look at we'll start with a quarter of 2020. So first quarter of 2020 compared to first quarter of 2019. So the corresponding quarter. And it's again on a cash basis, not on accrual basis, not on how you file your tax return, but on a cash basis of accounting. Was there a 50% reduction in cash receipts? Then you qualify. So you have to look at every quarter. So first quarter of 2020, first quarter of 19, second quarter of 2020, so every quarter you look and do a comparison where you're down 50%. Not a lot of people were down 50%. Obviously some restaurants, museums, live music venues. I mean, a lot of, they were really down, but they still had employees and they were still paying staff, right? So 50% reduction and so again, now you're going, how am I supposed to figure this out? Right. And that's why this is why it's complicated and confusing. It's very complex. So that's for 2020. Then 21 gets easier. And this is where most people we're finding qualify. So you take first quarter of 2021 versus first quarter of 19. Not 20, but first quarter of 21 versus first quarter of 19, was there a 20% reduction? Not 50 anymore, but only a 20% reduction in cash receipts. Well, a lot of businesses their cash fluctuates all over the place. So somebody could have an off quarter and qualify. And that happened. We have a client in Florida. They have, 150 employees, and it was a fluke. They just happened to qualify for one quarter. We got them. They're getting $492,000.
Oh, my goodness!
They're getting a $492,000 check in the mail just by. It really is totally a fluke. They're a growing business, but they've been paying their employees and they qualify. So, but now that 20% reduction is only available for first, second, and third quarter of 21. Not all four quarters. It ended early in the third quarter. So that's the last and final way to qualify. And then it gets even more interesting from there. Well, I find it interesting or sexy, right? You could potentially qualify under two or all three of those provisions. So you don't have to pick one. We had a client, they started after, I think it was a daycare. They started after February 20th, so they started in COVID, so they were already subject to government shutdown, and then they got money that they're getting money under that provision, and then they're getting up to $100,000 under the second provision, under the recovery startup provision. It's just so complicated, so complex.
So essentially three ways that a business can qualify. So let's recap just the line items of those, if you could, 1, 2, and 3.
Yep. Also, number one, was your business subject to a full or partial government shutdown? Instantly qualified, and it also depends, right? You have to look at the facts and circumstances. Number two, did you start your business on or after February of 2020? And is your revenue under $1 million? Yes. I mean, again, as long as you have employees to non-owners and non-family members, again, you immediately qualify for up to $100,000. You can't get more than $100,000. And then the third way is the cash receipts test, 2020 to 2019 and 2021 to 2019. So three separate ways to qualify.
For someone that completely uninitiated to financing or accounting, it must seem like the CPA exam is the easiest exam in the world to pass, because the answer to everything is it depends.
It depends, and I don't know. I know, it's really funny. Well, other thing I want to touch on, and then we want to talk about money too, right? We want to, how much, because we haven't talked about that yet, is actual dollar amounts. What is the amount of the credit? And that's mind staggering as well. So the other thing I want to kind of just briefly mention is a control group. So And again, there's specific, so if, and this is very common, right? Because people are entrepreneurial, they own multiple businesses. So if the way the law is written, if it's determined, and I'm not going to get into the specifics on how that determination is made because it's really getting down into the weeds, but if it's determined that these related companies, brother, sister, parent, sub, are considered to be a control group, then you have to do the cash receipts test among all the entities, right? So that's just the way it's written. However, what's interesting also is because we had this happen with a client in Florida, and they had 7 related companies. One of those companies was a restaurant, just a fluke, right? So you had 7 companies. One was a restaurant, but the way the law is written is because the restaurant was subject to a full or partial government shutdown, all 7 businesses qualified for the shutdown. And we got them, it was either $300,000 to $400,000, only because of the fluke and the way the law is written. So I just wanted to bring up the control.
Yeah, well, my limited understanding of that control group that I, talked to accountants about is usually it's a negative thing. It's a restrictive thing
usually.
But yeah, it sounds like here you can actually benefit. This is the time to benefit from that.
Not everybody will. So, yeah, are we ready to talk dollar amounts?
I think so. Because I think everybody, because with the PPP, there was the, and I think it was under the PPP, there was that $10,000 chunk that you could get, but then there was, some more.
That was EIDL.
Yeah, that's right.
That was the EIDL grant. Yeah, that was the EIDL.
See, I'm already confused.
So here, Yeah, I know it is. It is. And it happens to me too. Every now and then I'll be like, "What is that again?" I mean, because it's over. It can be very overwhelming to be able to. So that's why I'm thankful to have such a great staff that is up to speed on all this as well. So let's talk numbers. So we'll start with how much is the credit, because it's astounding. So the maximum credit not you, Jack. I mean, well, if you have a business that qualifies, if a company that qualifies can get $5,000 per employee for all of 2020. So you do the math, right? You got 10 employees. Your max is, 10 times 5,000, $50,000. But that's the max, right? You cannot get a dime more than that. So obviously, the larger the business gets, the larger the credit can get. So the 2020 is the smaller year. It's only, right? Everything's relative. It's only $5,000 per employee per year. So now are you sitting down?
I'm ready.
Yes, you're sitting down? Okay, ready. Okay. So the maximum credit that you can get per employee for 2021, and we'll just leave it as, we won't talk about the recovery startup business because that kind of skews it a little bit, but is the most you can get, again, in a check from the IRS, is $21,000 per employee. Per employee. So if you had 100 employees, you could theoretically get $2 million check from the IRS. Just with 100 employees.
That's amazing. I mean, is that just arbitrary? How do they go from 5,000?
So great questions. Yeah. So I don't know how they did it, but and we'll talk about 21 because that's the more sexy one and the more one that's bigger dollar amount. So the way it works, it's on a quarter by quarter test. So the maximum, so it's for wages per eligible employee up to 10 grand a quarter. So if you pay somebody 10 grand or more in a quarter, not in a month, not in a year, but in a quarter, then the credit, it's a 70% credit. You're going, what? This goes back to right. It's like PPP on steroids. It's too good to be true. Why would anybody give a 70% credit? That's like insane. So that comes out to $7,000. So in theory, if a business qualified for the first 3 quarters of 21, they could get $7,000 per employee per quarter, which is 3 quarters times $7,000 is $21,000. But again, that's the max. You have to look at how much PPP money did you receive, and that's where it gets really complicated. Is you have to, like I said, we have to go through a calculation of every employee, every pay period, and determine how to allocate those wages to either PPP or to ERC. So those are the dollar amounts. We have, so we've gotten tens of millions of dollars for clients. Tens of millions. I mean, it's just insane.
And it's not either 20 or 21. You can do that both. It's just the 5,000 applies to 20, and the 21 was it 21,000? You said applies.
21,000 max applies to 20 to 21. Yeah,
that's amazing. So here's I guess probably the next biggest question, and you touched on it a little bit earlier with all the backup, with all the the backlog and another tax season coming up. And then with the complications, I don't know how they go through and check this stuff. How long does it take to actually get this?
Great question. And we don't know. We just don't know. And the IRS originally had said that they would process these forms within 6 weeks. And we have yet to we're not aware of, but so, and again, there's a difference between filing a return, a live return, and e-filing it, and filing a paper amended return. It's the paper returns that are backlogged. So these, unfortunately, and the AICPA, which is the governing organization for CPAs in the United States, has made obviously is begging the IRS, please, I'll set it up so that these returns can be e-filed. But no, they're being paper filed, and so that's the reason for the backlog. So we have no idea. The IRS doesn't know, CPAs don't know, nobody knows. It's just going to take them a long time to process these refunds. So that's why we've put in place a lending program. If somebody has cash flow needs, they can borrow against it and get their cash. Obviously with they're going to have to pay interest, but they can have access to that money sooner than later. So great question. It's unknown right now. So it's a shame. The whole point of it is called the employee retention credit, right? It was to encourage employers to retain their employees, right, and get them the money so that they can continue to pay their employees. And the money's just not flowing. Yeah,
I mean, obviously the whole reason is to keep businesses afloat. That are providing jobs, and so taking that time. Now, is that loan program, is that something specific that your organization is providing?
Correct.
It's not something that's just available nationwide,
no.
or
no.
It's not a government program. It's something that you're
for our clients.
Okay.
It's not a government program. No. But again, it's a way we can help. I'm a business owner myself. Cash flow is always a challenge, right? So. Yeah, I understand, that some clients need the money now. Some people can wait,
Well, Kevin, I think that there's a lot of business owners, one, that had no idea about this, or again, because of the name, and the very vague guidelines that are put out there. I can imagine there's a lot of business owners that read about 2 paragraphs in and that, got no time for this.
Exactly.
And I think that's where, you're a true influencer in this field, in that, you give people hope that no, come on, we got this figured out. Come on in. We'll take a look, see what you qualify for. And I think that's
what we say. Right. And even if the answer is no, at least you looked into it, and now you know that you don't qualify, and that happens all the time. Right. But how could somebody figure this out on their own? Like, it's impossible. Well, we did, but we had a staff of people. How could your typical small business owner ever begin to even come close to figuring this out? It's really, really difficult and complex and challenging.
Well, I can tell you, as someone that is challenged by the digots, I'm thankful there's people like you that somehow click, and to have a passion for it like you do is just remarkable. Would you mind if I asked you, what led you to do this? What led you to help the people you help and do what you do?
Yeah. So, my dad was an accountant. So that's kind of what led me into accounting. And what I love is being able to, over the years, worked with thousands and thousands of business owners over the years. And what I just love I love entrepreneurship, because since I'm an entrepreneur myself, I consider myself a serial entrepreneur. We've started and sold, I don't know, 4 or 5 separate businesses, but one of being a bed and breakfast in Connecticut of all things. But yeah, I just love helping people. I just love, whether it's, hey, you got a check in the mail from the IRS for $250,000 to, I had a phone call recently with a new accounting bookkeeping client. We had our first tax phone call, and within 30 minutes, I've already saved her, I don't know, about $200,000. There was one tax strategy, boom, saved you 30 grand. It's like, why didn't my other CPA tell me that? I don't know. I mean, I love this shit, and then they're doing, they're developing an app. So I said, okay, we can get you another tax credit. It's the R&D tax credit. That's going to be 40 grand. Boom. It's like, wow, we're up to 70 grand. And then, she has about $1 million in taxable income this year. I said, okay, I can introduce you to one of our strategic partners. Boom. We can save you 100 grand in, through a tax mitigation strategy that is normally utilized by the high net worth people and family offices. That's available to small and mid-sized businesses. Boom, we can save you 100 grand in taxes. So one phone call, boom, I can save you $170,000. So our tax attorney is amazing. He's working with a client right now to save him $1 million in taxes. The tax attorney that we use, he saved a client a couple of years ago $1.5 million. So I mean, that's what jazzes and excites and energizes, is how, holistically, right? How can we, so we help, not only just with accounting and finance and tax, but things like consulting and, business consulting and coaching. How can we help you grow your business? How can we help you, sell your business, create an exit strategy for your business? So that's what I'm passionate about, is helping fellow entrepreneurs with their business in a multitude of areas.
Well, let me, because I think that, there's a lot of business owners, and I speak to a lot of business owners too, that they're small business owners, even what you call solopreneurs. Yeah. And then a lot of them are perhaps a little intimidated. Someone like Kevin wouldn't be interested in my little business, working, with what I do. He's going to, he works with the big businesses. Is there a range that you can just give people a ballpark so they maybe won't feel intimidated, that they can contact you on this?
No, it's a great question. No, I mean, we have businesses, we have startups, we have solopreneurs. Oh yeah, we'll work with anybody. But yeah, generally speaking, businesses up to 20 million in revenue. I mean, anything larger than that, generally they'd be better served with somebody else that has a niche in that area. But there's, we have a lot of solopreneur clients. We have a lot of, we do payroll for clients, that only have a handful of employees or a few employees. And yeah, we're happy to help wherever we can. There was, again, another kind of ERC, back to ERC, because that's kind of what we're focused on and talking about. But it was a restaurant in Southern Arizona. happened to be talking to the bookkeeper, so she knew the numbers, and we roughly figured out over the phone they qualified for $9 grand. And you go, what's $9 grand? It's no big. But hey, $9 grand to them is a couple of months of rent. It's a couple of right. That's all. That could be a lifesaver to that company. So, oh my God, we'll all day long try to help you get that kind of money.
Well,
or save you that kind of money.
I got to say, Kevin, I want to thank you for coming on today, because you really are, even though these programs are in place, they're very difficult for people to understand. They're very difficult for people to navigate. And, the people that you are helping truly are the backbone of this country, and they're the backbone of this economy.
Oh, they are.
I think it's, without question, that a lot of them would not survive, especially through this pandemic, without someone like you to help them navigate. You're the, I think you're the right financial Sherpa of the pandemic, and I think.
There we go. Can I steal that?
Yeah, absolutely. And it's one that the people need. So I have to ask, how can folks find out more about Kevin Marshall, about Profitopia, and how they might be able to take advantage of that staff that you have that can help them with this?
Help them. Yeah, so it's simply Profitopia.com. So profit, so Profitopia, Profitopia.com, and we get feedback all the time. People love that name, and I'm the one who I coined that phrase or that term when I first 5 years ago when I looked it up. There was maybe only one page of Google results for that name, so the name is available. So we've registered it. We own the IP. We own the website. So again, Profitopia.com, or the phone number is a vanity number 888-PR-TOPIA, because Profitopia is too long, but 888-PR-TOPIA, and so that's how people can reach us. I'm happy to provide my email address is kmarshall@profitopia.com. So again, K, the letter K for Kevin, and then Marshall with 2 L's, MARSHALL @profitopia.com. And we're happy to help and serve and see if we can help get you some money to get through this and thrive and grow and come out the other side, healthy and vibrant.
Oh, fantastic. Kevin, again, I got to thank you for coming on, sharing this information. It'll make a huge difference to a lot of businesses that are going through some tough times and struggling through this pandemic. So thank you very much for coming on.
Sure. Thank you, Jack.
All right, folks, there you have it. Definitely check out Kevin Marshall and Profitopia. Again, that's Profitopia.com. And we'll have a link there right on the show post. And until next time on Influencers Radio, remember, you are the only real game changer.
You've been listening to Influencers Radio. To get all past shows and updates on future shows, visit influencersradio.com today.